Welcome to This Explainer. Okay, so if you're 60 or older and you're currently trying to navigate the absolute labyrinth that is Social Security and Medicare, well, you are absolutely in the right place today. In digging through the data, I found this fascinating and honestly urgent reality. There is money sitting in the system right now with your name on it. And we're not talking about funds you might qualify for someday in the distant future. We're talking about money you've already earned, already paid into, and built up over decades of hard work. But here's the catch. The government is just going to quietly hold on to it indefinitely unless you take the proactive steps to actually claim it.
All right, let's dive right into this. There's this one golden rule you've got to keep in the back of your mind. The Social Security Administration does not call you when something is waiting. They literally do not pick up the phone. They don't send you a friendly letter explaining your new options. This is a massive systemic flaw that you have to navigate yourself. And as you'll see, some of the payout windows we're looking at today close entirely, quietly, without any warning whatsoever. And once they close, that money is just gone.
So here is our checklist for today. We're going to run through spousal benefit top-ups, survivor benefit switching, IRMI appeals, WEP and GPO corrections, and finally, Medicare over-the-counter benefits. You really need to check your own situation against all 5 of these. All right, let's get started.
Number 1, the spousal benefit top-up. This is all about claiming what you've already earned.
Now, this first one applies heavily to married couples. You know, millions of people make this super logical but completely false assumption. They think, oh, Social Security processed both of our records automatically. Well, spoiler alert, they didn't. Your own personal retirement benefit and a spousal benefit are 2 entirely separate claims. They're processed completely independently by the government. So, if your spouse claims Social Security and their monthly check is larger than yours, you might actually be entitled to receive up to 50% of their benefit. But again, the SSA doesn't just cross-reference your records and happily send you the higher amount. You have to actively ask for it.
And the math on this is actually staggering. Let's say your spouse is pulling in $2,400 a month. Half of that is $1,200. So that's a potential permanent top-up of $1,200 every single month. If you're currently getting a benefit based only on your own earnings record and your spouse gets a meaningfully larger check, you need to call the SSA directly at 1-800-772-1213. Grab both of your Social Security numbers, call them up, and ask them point blank if a spousal benefit top-up applies to you. Literally, a 20-minute phone call could permanently increase your monthly income. Moving on to number 2, the survivor benefit switching strategy, which is basically how you maximize your lifetime income. If you're a widow or widower, the average monthly survivor benefit in 2026 sits right around $1,863. But here's the real secret, the stuff the SSA rarely explains. A surviving partner can actually begin collecting survivor benefits as early as age 60. And yeah, sure, it's a reduced amount at that age, but while you're collecting that income throughout your 60s, you're leaving your own personal retirement benefit completely untouched. And this brilliantly illustrates how that works. By leaving it alone, your personal benefit continues to grow at a guaranteed 8% per year past full retirement age. Then boom, at age 70, when your personal benefit hits its absolute peak, you switch over to it. Or, if the survivor benefit is still larger, you just stay on that. It's fantastic because your household gets steady income in your 60s while locking in the highest possible payout later. But remember, they won't automatically suggest this combination to you. You have to ask for this specific sequence.
All right, number 3, appealing Medicare IRMMA surcharges. Let's talk about eliminating some unnecessary fees.
This completely shifts gears to the higher earners out there paying extra on their standard Part B premiums. These hidden surcharges, they're known as IRMA, and they are incredibly sneaky. I mean, they come directly out of your Social Security check automatically, before you even see a dime of it. And the financial stakes here are huge. If your income as a married couple exceeded $218,000, you are getting hit with these. Depending on your tier, you could be paying anywhere from an extra $1,100 up to nearly $7,000 per person per year. But here's the crazy part. The SSA calculates this penalty using your tax return from 2 years ago. So your 2026 surcharge is based on your 2024 income. But what if your situation has drastically changed since then?
Fortunately, there is a fix. If you're paying a massive surcharge based on income you literally no longer earn, you can fix it immediately in 3 simple steps. Step 1. Identify if you had a qualifying life-changing event. Did you retire? Did you lose a pension? Or did a spouse pass away? If yes, Step 2. Go straight to ssa.gov and download Form SSA-44. Step 3. Submit that form with proof of your current lowered income. The SSA will review it, and that huge surcharge gets reduced or wiped out entirely.
So many people just pay these thousands of dollars because they have no idea this appeal process even exists. Don't let that be you.
Number 4, WEP and GPO corrections. Time to talk about retrieving your back payments. Okay, because of the recent Social Security Fairness Act, I really want to speak directly to the teachers, firefighters, police officers, and federal civil service workers tuning in. This law retroactively eliminated 2 old rules, the WEP and the GPO, that had frankly been unfairly reducing or even eliminating benefits for decades. If you spent part of your career in a job that provided its own pension, but you didn't pay into Social Security during that time, this applies directly to you. Because the old rules were eliminated retroactively, the SSA actually owes you back payments. They're currently processing billions of dollars in corrections as we speak. Now, what's really interesting about this slide is the sheer scale of the payout. The average one-time retroactive payment for affected recipients, get this, is currently sitting at $6,710. Plus, monthly benefits have increased by an average of $360 permanently going forward. But not everyone's account has been fully processed yet. If you're in one of those professions and your check hasn't magically updated, pick up the phone. Call the SSA right away and ask specifically if your account has been updated under the Social Security Fairness Act.
And finally, number 5, Medicare over-the-counter benefits. Please, stop letting free money expire.
This final payout applies to roughly half of all Medicare recipients, specifically those on Advantage plans. And the data here is genuinely stunning. Look at this, 70% of these benefits go completely unused every single year. That is $5 billion with a B just sitting there and expiring. Why? Well, because people get this random prepaid card in the mail, they think it's a scam or junk mail, and they toss it right into the kitchen junk drawer. But this is a real monthly or quarterly allowance loaded onto an account specifically for you to spend on health-related items. And the best part? It doesn't require a long phone call to the SSA. You literally just log into a portal.
And we aren't talking about, obscure medical equipment either. You can spend this allowance on everyday essentials without a prescription. We're talking vitamins, pain relievers, cold medicine, dental care, first aid supplies, even blood pressure monitors. This is highly meaningful financial relief. The average benefit across these plans is over $400 a year, and some plans provide an incredible $1,200 to $2,400 annually. But here is the absolutely crucial detail you must take away from this. If your benefit period is quarterly, unused balances usually do not roll over. They just quietly reset to zero. So please log into your plan's portal or call the number on the back of your card today, check your balance, and spend that money before it vanishes.
So, which brings us to our final question for you to really ponder today. Which of these hidden payouts is sitting in your account right now? Whether it's a spousal top-up that you falsely assumed was automatic, or a brilliant survivor switching strategy, or maybe an appeal to eliminate an unfair IRMA surcharge, claiming massive back payments, or just simply buying everyday vitamins with your OTC card, this money belongs to you. You've already earned it. The singular difference between the people who receive this cash and the people who don't is simply knowing it exists and taking that one proactive step to claim it. Thank you so much for joining me for this explainer. Get out there, check those accounts, and I'll see you next time.